Good evening and welcome to the FITT Show, financial information for today and tomorrow. I'm Bobby Kinzer,
And I'm Thomas Doty.
and we are the FITT Show, helping our people get their finances in shape. Welcome, everybody. It's always a pleasure to have you tuning in from around the country and actually around the world. Just want to remind you, if you can click on the like button and the heart button, it gives us so much more exposure to more people. That's how Facebook works. And also, if you could put comments in the comment box, that will be very, very, very uh, great for us. So, Dote, how you doing today?
Man, I'm happy to be alive. You working on your suntan down there?
Yeah, man, I'm coming to you all from sunny Fort Lauderdale, 86 degrees today. Oh my goodness, my knees are just so thankful for this heat. Hey, so look, let me tell y'all something. We got an action-packed show today. Today's show is all about taxes. So, if I was you, I would definitely get a pen and paper because we're going to be dropping it like it's hot. But before we start, like we always do, we start at the top of the day with the stock market update. And
Yeah, this has been a crazy week. People started getting the feeling that the Fed was going to reduce the interest rates, or I shouldn't say reduce, not raise it as much as they had been, or basically not being as aggressive as they have been. And so the market has been reacting accordingly for the last week. Dow has been pretty flat. It's been up and down, kind of steady as it goes. And it's only up 100 points or about 0.3%. But the NASDAQ has made a pretty huge jump, 6% in the past week, which is huge. And if you remember last week, there was also another big jump. Microsoft is up 17 points, 7%, which is, those are all stocks that are interest sensitive. So as they see the Fed cutting back on the rate increases, that's real positive for these stocks in the tech area. Tesla is up 28%, 28 points or 17, almost 18%, which is just crazy. I think I told you last week, they had a huge price cut. And in some cases, it was up to 20%, which is creating all kind of shockwaves through the EV market because most of the other EV makers can't afford to. They're selling their EV cars at a loss because of the small production volumes. As you know, as you produce more, the cost gets cheaper. And so they're selling most of theirs as a loss. And some of them have actually followed Tesla in cutting their prices. And so it's kind of funny, though, a lot of people who just bought a Tesla and then see the price cut in some cases as much as 20%. They're a little bit irate about that. And the used car market has also reduced because of this big price cut. So it looks like it's going to put more people in EVs. And the other automakers, for example, Cadillac, they only made about 100 Lyric. That's their hot car that is supposed to be a competitor for one of Tesla's. And Tesla, I think, produced like 1,200,000, 1,300,000 models last year, and they're expecting to do 1,800,000. And so a lot of people are now bullish on Tesla. The price cut is making them act more like a regular auto company and cutting prices to raise production or to raise sales volume, which looks like it's working. Apple's up about 7 points, about 5%, and Pfizer stayed flat. Pfizer still going to have issues until they come out with what's next after the big COVID thing, because that's where a good portion of their revenues were coming from. So just want to warn you, everything was up today. After the market closed, Apple and Google and a couple other tech companies reported earnings, and they were disappointing. So there's going to be a big drop, I'm guessing, tomorrow because of the poor earnings. And one of the reasons the Fed decided not to be as strong in cutting rates was because the labor prices aren't going up as much as they had been, which, everybody thinks that's bad, but it's really not that bad if inflation isn't crazy. is if your wages are going up 6% and inflation is 12%, you aren't making any headway. But if your wages are going up 3-4% and inflation is back down to 2%, you are getting some more spending power. So the Fed's they're taking all that into account and trying to get inflation back under control. And we hope we can see the wage rates not increase so much to cause the Fed to cut rates a little more aggressively. Because if they do, it could very easily kick us into a recession. So it's going to continue to be testy as we go along. So just hang tight and just keep thinking about the long play.
Well, though the aftermarket is already starting to see a decline, so
it's coming.
To your point, yes, tomorrow might be pretty bad for the stock market.
Well, it'll be bad for NASDAQ for the tech companies.
Yeah. So let's talk about cryptocurrency. One of my favorite ones, though. So cryptocurrency is going up every week. It's been going up for the last 3 weeks. Not as much the past 2 weeks. Approximately, it was going up about 9%. The whole cryptocurrency market and the top 10, because we sort of tell everybody keep an eye on the top 10. There's over 21,000 cryptocurrencies, but only 9,000 are active, and that's a lot, 9,000. But the Bitcoin, well, first of all, the crypto market as a whole is up by $33 billion. It's up to $1.1 trillion, which is good, up 3%. The Bitcoin, which is still the number one Bitcoin amongst all cryptocurrency, is selling at $23,571. That's $551 up from last week, about 2%. Ethereum, which is dealing with those smart contracts, it was supposed to have a little better structure, is up by $60. It's at $1,654, up 4%. You have Tether, which is those stable coins, which is being backed by a dollar or some other asset. They're holding steady. Dogecoin, Tether, USDT is in the number 3 position. Ethereum has been holding at number 2. Those have been strong cryptocurrencies. The Dogecoin has been holding at number 9, and it went up 0.01. So it was really just 1 cent. It was at 8 cents, and now it's at 9 cents. And then you still have that meme, Shiba Inu, the meme coin, which is like a character or a symbol that's been holding at $15. So dope. The market's doing crazy things. Cryptocurrency is doing some interesting things. Wow, man, it's so much to talk about.
Let's get started with one of my favorite subjects.
Taxes. Right. So let's talk about taxes.
We got a few ideas before we get into the main crux of our show tonight. We just want to give you a few tips to get you ready for the tax season. For a lot of people, it's a traumatic time and can stress a lot of people out. It stresses me out only because, I've had my identity stolen once, and that can create havoc in your life. So I filed my taxes today. I got them out and going. But here are a few tips to keep you on the right track, keep things between the guardrails, and keep you from going crazy. The first one, get you a folder, put the year on it, and when you get an envelope in the mail, pop it in that folder so you have it handy, ready for when you sit down and do your taxes, or when you take it to a financial professional to do them for you. But have one place that you keep all your information so you make sure you don't miss anything, you aren't looking for anything. Have one place that you keep it ready to go.
Another one is to designate a place. Like keep your previous year's tax information in a central location. In most circumstances, your tax filing this year will be largely similar to the previous year. For this reason, you may want to reference previous tax documents to confirm specific numbers or even to see which documents were relevant. You can store your tax information in a folder or on a bookshelf, a file in your safe, or even a box of knowledge. I know a lot of people use the box, put all their stuff in the box in the closet, but pick one and stick with it.
And another one is go paperless if you can. You'll have to print the forms out and put them in that folder you have marked for this year's taxes. But it'll be faster. Usually you get the information faster than you do in the mail. You can get it sooner, and it's better for document retention because you can have a folder on your computer that has that information in it, and it can help you streamline things for future years. So try to go paperless if you can.
It is so important for you to know what you need. And think about where your money is stored and the companies that may have a long-term relationship with your money. Check each of these places for tax-related information. For reference, if you have any of the following, you may need a related tax statement for each. For instance, like your job, you should get a W-2 form, and if you receive unemployment, you should get a form 1099-G. Debt, a mortgage for a home, you need form 1098. Student loans, form 1098-E. A personal loan, that's forgiven, that's form 1099-C. And other loans that you may have. Even if you have daycare, all the receipts you save from the daycare or after school program showing your expenses. This one is a good one. Everybody have bank accounts, but especially savings accounts and interest-bearing checking accounts. They usually get a 1099 INT form for interest you receive. And then you have the investment account. Depending on what types of accounts you hold, there could be several forms to watch for. You got the 1099-B, that's for capital gains. You have 1099-DIV, which is for dividend income. And then you have the 1099-R for retirement distributions. And last, donations, charity contributions, receipts, and end of the year receipts from any monthly or recurring payments.
Yeah, I mentioned this before. File as soon as you can. That lessens the amount of time that people can steal your identity, which there is a lot of that going on now. So file early, get it done, and just realize you can file, and even if you owe, you don't have to pay until April 15th. But you can file your taxes at any time, and I'm not sure April 15th is the day, but whatever the due date is, you can wait until that day to actually pay it.
I think this year is April the 18th, though.
Yeah, the 18th. That's why I knew it wasn't the 15th. But anyway, just file early, and if you don't have the money right now to write the check, you can wait until April 18th and mail the check then, or pay then.
You must know where you stand with the IRS. If you down to know the status of your refund, the IRS has the outline tool for that. The Where is my refund portal. Otherwise, you have a tax question, it can be difficult to get hold of the IRS, especially around this time of the year. They are understaffed, catching up with many rule changes and processing a lot of tax returns. For this reason, you may receive a letter from the IRS that doesn't make sense. Don't panic. There's probably a good explanation for it. Now, if you need to call them with a question, be patient and expect a long wait time. You can also check the IRS website to access tax records. See whether you owe the IRS any payments, or whether you have processed your payments, if they've already processed your payments or your tax return.
Yeah, and you got to know when to get help. And it's funny, again, we often talk about how we don't know what we don't know, and you don't want to find out. You should have gotten help. I was telling Bob the story, and when I used to always do my taxes on an Excel spreadsheet. And then when I would file, I'd always be within $100 of whatever TurboTax told me I owed. But when I start making a little more money and I'm moving to that alternative minimum tax category, I didn't know anything about it. And I got hit when I looked at what I did on Excel compared to what TurboTax said. I owed a lot more money than I thought, because I didn't even know what an AMT was. And I'm a freaking CPA, had no idea that I was in the realm of alternative minimum taxes. And it kind of shook me up, because I had to come up with with a few $1,000 to pay my tax bill that I hadn't expected, and I felt kind of stupid for not knowing. So you got to know when you need help, and oftentimes as you progress in your career or your earnings grow or you buy houses, start a business, a whole lot of things can come up that could make it very complicated to do your taxes. So know when to get help. If you need a professional, go get a professional, find a tax preparer, somebody who knows what they're doing. Bob prefers a CPA because they have the credential behind their name, but you just want to find somebody who's real good at doing taxes, understands your situation, and is able to handle your situation. And in addition, they can look ahead to make sure you're doing some of the tax avoidance things you should be doing. So it's very important to know when to get help before you need help, because you don't want to get into making a mistake and owing interest and penalties and all that kind of stuff to the IRS, because they can be pretty vicious and mean. So stay ahead of the game and know if you need help, get help.
Yeah. So, Doug, let's get into the IRS red flags, things that may trigger the IRS to want to audit you. Let's talk about that for a little bit.
Yeah, that's really, this is a tough one. This is a tough one because the first thing they'll come at you for, if you don't report all your taxable income. And again, it's one of those situations where you got to kind of be thinking ahead, and little things like I opened a couple of savings accounts because they were offering these huge $400 or $500 bonuses. Well, that's taxable income, so you gotta know that you're gonna get a 1099 for that, and so the IRS gets copies of those, and so they compare them to what you've reported to make sure that they match up. So if you miss something, especially something that's reported to the IRS, and that's stuff that comes on W-2s and stuff that comes on 1099s, you're going to have an issue with the IRS because they're looking for that, to match up perfectly. And so you got to report all your income sources on your 1040, even if you don't get a 1099. If you get paid for doing something on the side, now you should report that. But again, a lot of people don't, and the chances of getting caught, I don't know, because I'm kind of afraid of getting caught, so I make sure I report what I need to report. But things that are given to the IRS, you absolutely have to report, or they'll come and get you.
Well, here's another thing can trigger a red flag, and it's making a lot of money. While the overall individual audit rates are extremely low, though, the odds increase significantly as your income goes up, especially if you have a business income. Now, remember, the IRS is getting more money for audits, with a $45.6 billion of its $80 billion in extra funding over 10 years dedicated to enforcement activities and collection measures. Now, it's going to take them a while, a couple of years, several years to get up to pace. But this doesn't mean you go have a cheat for all IRS forms, because you might get audited. So the Treasury Department and IRS say that the enforcement funds will be used in part to audit more high net worth individuals and pass-through entities such as LLCs and partnerships, among other taxpayers. I got an LLC, so this could apply to me. So Treasury officials have made a big promise saying that taxpayers earning under $400,000 won't see increased audit rates related to the recent years. But the IRS will be hard pressed to keep this promise, but it's too soon to know for sure what they really going to do. So err on the safe side.
And Bob, what makes that difficult is they have been cutting the IRS's budget for years. The Republican legislature have been cutting the IRS budget. And so that makes it difficult to audit high-risk, complicated tax returns because of the manpower required. So they would focus their efforts more on the middle class or let's call it the low-hanging fruit, the stuff that was easy to catch. But like you said, with all the people they're throwing at it now, they're supposed to put their effort into the rich folks. So hopefully that happens. And I've always felt if you ain't doing nothing wrong, why would you worry about getting audited by the IRS? If you have what you need to have, you do what you need to do, you shouldn't be a problem.
Hey, but they have this thing called the High Wealth Exam Squad. And it's even getting back into action. And this is a specialized group with the IRS, which tackles examinations of the super rich. They review, the revenue agents take a kitchen sink approach in auditing these individuals by reviewing not only their 1040 in returns, but also returns of entities they control, like both foreign and domestic. Now, we're not saying you should try to make less money. Everyone wants to be a millionaire. And some people are billionaire. You just need to understand that the more income shown on your return, the more likely it is that the IRS will be knocking at your door.
And if you're not a financially savvy person, you need to get help. But if you are, the best thing you can do is adjust your W-4 to make sure you're having the right amount of money withheld so you don't get caught when you file your taxes with a large tax bill. And if you have a tax preparer, they should be able to help you. Or if once you get it done and you got a big refund or you get a big bill, adjust your W-4s so it's more to where you want it. So that's what you should do. And okay, the next group of people that will get scrutiny from the IRS are non-filers. And it's really surprising because there's a bunch of high earners, people who make a lot of money who just don't file. And they actually have a strategic enforcement group that's now going to look at people who received incomes in less than $100,000 but didn't file a return, which is really kind of crazy to me. But they're going to work and try to go after those, and you got to pay levies, liens, and they could even have criminal charges. So you don't want to be a non-filer because the IRS will come and get you.
The next one is the big one that really gets people. And that's taking higher than average deductions, losses, or credits. Now, if the deductions or losses or credits on your return are disproportionately large compared with your income, the IRS may want to take a second look at your return. Taking a big loss from the sale of rental property or other investment can also spike the IRS's curiosity. The same goes for bad debt deductions or worthless stock. But if you have the proper documentation for your deduction, loss, or credit, don't be afraid to claim it. Don't ever feel like you have to pay the IRS more tax than you actually owe.
Another one that gets a lot of people is taking large charitable deductions. Now, you got to realize that the IRS uses formulas to calculate what an average person with specific income levels donates. And so if you are very high compared to what the average is for your income level, that raises a red flag to the IRS. And most people who, especially if you donate clothes or furniture or stuff like that, don't go through the effort of getting, the proper appraisals or use the IRS guide for how much you should be deducting. And a lot of people kind of come up with their own numbers. But if you donate over $500, there's a certain form you should get from the IRS form that you should fill out. And if in past years, or last year anyway, you got a cash deduction, even if you didn't itemize, that's going away this year. So you do have to itemize in order to take charitable contributions. So just be careful there. Make sure you know the rules as far as if you're deducting mileage, or if you're donating things that are non-cash and you're coming up with the values to use as the deduction. The IRS has a form that you can use that'll give you an amount to use, or it has to be a fair appraisal of what the thing is worth. So Try to stay between the guardrails again there, because if you are way higher than average, they'll come and get you.
And though if I'm right, it says 500 there. I think they increased it to $600. But with the new standard tax deduction, that takes away the charitable contribution deduction, doesn't it?
Yeah, you don't have that anymore. The cash, unless you itemize.
Unless you itemize, right? But if you take the standard deduction, which for a lot of people, I think it's around about $29,500 now, though. That's
28.7.
28.7. Oh,
if you're over 65.
okay. That's pretty high, man. I mean,
yeah, you have to have a lot of interest, a lot of deductions, and you only get $10,000 in taxes, so you're kind of limited there.
Right.
It'd be hard. You have to have a whole lot of interest and a whole lot of other stuff. Hopefully, you don't have a lot of medical expenses. That'll help you get there. But yeah, it's hard to get to 28,000.
So another one is running a business. Now, the Schedule C is a treasure trove of tax deductions from self-employed people. And I've always said this, though. I think everybody should have a business to take advantage of this particular tax write-offs. If you have, and we're going to talk about it further down, a hobby that you can turn into a business. But it's also a gold mine for IRS agents who know from experience that self-employed people sometimes claim excessive deductions and don't report all their income. The IRS look at both higher grossing sole proprietorships and small ones. So sole proprietorships reporting at least $100,000 of gross receipts on a Schedule C, and cash incentive businesses such as taxi, car washes, bars, hair salons, restaurants, the like, have a higher audit risk. And the same for business owners who report substantial losses on the Schedule C, especially if those losses can offset in whole or in part other income reported on the return, such as raises. Now, also claiming 100% business use of a vehicle is a prime audit flag. Now, IRS agents know that it's rare for someone to actually use a vehicle 100% of the time for business, especially if no other vehicle is available for personal use. Now, the IRS also targets heavy SUVs and large trucks used for business, especially those bought late in the year. That's because these vehicles are eligible for more favorable depreciation expensing write-offs. Be sure you keep detailed mileage logs and precise calendar entries for the purpose of every road trip. Sloppy record keeping makes it easy for a revenue agent to disallow your deduction.
Okay, and the next one is kind of an interesting one. It's writing off a hobby loss. Now, that's another one of the things. If I could do over, I would have had some kind of business just to not to generate losses, but just to supplement my income, but also create some tax deductions for things that I would have to spend anyway. But if you are running a business, it has to be run to make money. The goal has to be to make profit. You just can't lose money every year. And at that point, it looks more like a hobby than an actual business. And they'll come and get you, and they'll call it a hobby and say you aren't really trying to make money. It doesn't look like you're running it as a business, and you can lose all your tax deductions. So you must be running it like a business-like activity and have a reasonable expectation of making money. And if you don't, then they can come back and get you. And you do not want to have to deal with that. But we often encourage people to start a business. It's something that they're good at that may be like a hobby, but you can get people to buy whatever it is that you make or sell in order, one, to supplement your income, or two, to create some business deductions, which can help lower your taxes in other ways or lower your spending in other ways. So just be careful that you're trying to make money and you aren't just losing money to cut your taxes.
Yeah, exactly. So listen closely to this one because this is kind of tricky. Failing to report certain professional earnings of as self-employment income. But some limited partnerships and LLC members who don't file Schedule SE or pay self-employment taxes are on the IRS's radar. The agency has an ongoing audit campaign involving the issue of when limited partners and LLCs in professional service industries owe self-employment tax on their distributive share of the firm's income. So in 2017, the tax court ruled that members of a law firm organized as a LLC and who actively participate in LLC operations and in management weren't mere investors and were liable for self-employment taxes. So the LLC or limited partnership owners in law, medicine, consulting, accounting, architecture, and other professional service sectors are being eyed by IRS examiners who've been conducting audits over the past few years.
Okay, the next one is claiming rental losses. And that passive loss rule usually prevents the deduction of real estate losses, but there are two exceptions. And one, if you actually participate in a rented property, you can deduct up to $25,000 of loss. Or if you are a real estate professional, and that's where you spend most of your time, is working in real estate, doing the things that real estate people do. And IRS, that's one of the big things they look at, people who deduct those rental losses. And then they're using that just to offset their income. And so people are claiming to be real estate professionals, but they have a W-2 that shows that they make a lot of money doing other non-real estate losses. And their Schedule C might show other income as opposed to rental, as opposed to working as a real estate agent. And so they're looking to see if you work the necessary hours, especially in a case if you're a landlord and you're really not in the real estate business. So you got to be in that business to claim these passive rental losses. So be careful there if you're a landlord.
This next one, a lot of people didn't even know it existed, but claiming the American Opportunity Tax Credit. College is expensive, and tax laws give individuals some tax breaks to help with costs. And one of them is the American Opportunity Tax Credit, which is also called the AOTC. And it's worth up to $2,500 per student for each of the first 4 years of college. It's based on 100% of the first $2,000 spent on qualifying college expenses and 25% of the next $2,000. And 40% of the credit is refundable, meaning you get it even if you don't owe any tax. This tax saving begins to phase out for joint return filers with modified adjusted gross incomes about $160,000, and that's about $80,000 for single filers. So the student must be in school at least half time. Eligible expenses include tuition, books, required fees, but doesn't include room and board. That's pretty interesting. The IRS is ramping up its efforts in enforcing the American Opportunity Tax Credit. Among the problem areas it is focusing on is taking credit for more than 4 years of the same for 4 years for the same student, omitting the school's taxpayer ID number or Form 8863, the document used to claim the AOTC. Now, taking this credit without receiving a Form 1098T from a school and claiming multiple tax breaks from the same school college expenses. So they're looking at those kind of things.
And another easy catch is when you take money out, an early payout from an IRA or a 401k. And those are real tricky because if you pull the money out before you're 59 and a half, there's a 10% penalty that you're subject to because you're not, it's supposed to be for your retirement. And so the IRS knows that a lot of people don't know about the 10% penalty and don't really understand the exceptions, because there are certain exceptions that allow you to take it out without penalty. You still have to pay the taxes, okay? But you can take it out without penalty with several exceptions. A couple are heavy medical expenses, or total or permanent disability, or you can take it out in equal payments over 5 years, and you can avoid the 10% penalty. But the key thing there is you don't want to, if you can, you want to do a direct rollover into an IRA so you aren't subject to the penalty. If you take the money out, you only have 60 days to put it into an IRA. And if you miss that 60-day deadline, it becomes taxable and subject to that penalty if you're not 59 and a half. So the easiest way to do it is to do a direct rollover so the money doesn't come to you, because some companies will take the deduction or take a withholding automatically if you pull the money out. And so let's say you have $100,000, they may withhold 20% and you only have 80. So even if you roll it over, you have to come up with that other 20 to roll over the amount that you took out. So if you do one of those and you are not 59 and a half, try to do a direct rollover to avoid getting caught up and missing the deadline for transferring, so you don't have to pay that 10% penalty and the taxes that go along with it.
Though the next one is a little sensitive, is taking an alimony deduction. You know the old record, it's cheaper to keep her, but the alimony paid by cash for check under the pre-2019 divorce or separation agreements is deductible by the payer and taxable to the recipient, provided certain requirements are met. For instance, the payments must be made under divorce or separate maintenance decree or written separation agreement. The documents can say the payment is, the document can't say the payment isn't alimony, and the pair's liability for the payment must end when the former spouse dies. You'd be surprised how many divorce decrees run afoul of this rule. Now, alimony doesn't include child support or non-cash property settlements. The rules of deducting alimony are complicated, and the IRS knows that some filers who claim this write-off don't satisfy the requirements, and it's also wants to make sure that both the payer and the recipient properly report alimony or their respective returns on their respective returns. Now, mismatch in reporting by ex-spouses will almost certainly trigger an audit. The alimony payment pursuant of the post-2018 divorce or separating agreements is not deductible, and ex-spouses aren't taxed on alimony they receive under certain agreements. Now, older divorce pacts can be modified and to be followed. So, if both parties concur, they modify agreement to specifically adopt the tax changes. The IRS closely polices whether taxpayers comply with the change. Now, Schedule 1 of the 1040 form requires taxpayers who deduct alimony report alimony income to fill in the date of the divorce or the separation agreement.
Okay, and another one that's becoming very prevalent is failing to report gambling winnings or claiming big gambling losses. Whether you're playing slots, betting on games, betting on horses, whatever. Uncle Sam wants his cut of the winnings. And recreational gamblers, they got to report their winnings as other income on 1040 form. And a lot of times, if it's over a certain amount, the place will actually report that information to the IRS. Professional gamblers use Schedule C. And failure to report gambling winnings, that can draw IRS attention, especially if the casino or whoever you win the money from reported that amount on a Form W-2G. So, and you can't claim large gambling losses because you can only deduct losses up to the amount of your winnings. So if you just lose, you don't get a tax break, okay? So if you win a lot and lose a lot, you can use the loss to offset the winnings, but you can't just deduct gambling losses. And so just be careful if you do have a big win, that realize it probably will get reported to the IRS, and you will have to put that on your 1040 form. And the
And,
IRS that's an easy catch for them.
and gambling is really picking up, especially with the sports gambling. If you look at
It's out of
all the
control,
commercials,
totally out of control.
yeah, it is. Now, claiming a foreign earned income exclusion. Now, this applied to me when I was playing professional basketball overseas. Now, U.S. citizens who work overseas can exclude up to $112,000 of the income earned abroad on their 2022 tax return if they were bona fide residents of another country for the entire year or they were outside the United States for at least 330 complete days in a 12-month span. Additionally, the taxpayer must have a tax home in the foreign country. The tax break doesn't apply to amounts paid by the U.S. or one of its agencies to its employees who work abroad. So just remember, the IRS actively sniffs out people who are erroneous taking this break, and the issue is coming up in disputes before the tax courts a lot these days.
Okay, and another one, if anybody's into has a marijuana business, let me know. But IRS is also targeting anybody operating a marijuana business, and they got a bunch of tax issues, and they're prohibited from claiming business write-offs other than the cost of the weed. So it's a tricky situation. If you know anybody that has a marijuana business, just know that the IRS is keeping an eye on you and looking very closely at what you're doing.
And what happens with the marijuana business is still not federally legal. So the FDIC, you can't put marijuana money into a FDIC insured bank. So their causes right there a bunch of cash issues and reporting issues. So IRS really be looking at these people. Now, people engage in virtual currency or other digital asset transactions via cryptocurrency, or non fungible tokens. The IRS is on the hunt for taxpayers who sell, receive, trade, or otherwise deal in Bitcoin, other virtual currency, or other digital asset, and is using pretty much everything in its arsenal. As part of the IRS efforts to clamp down on unreported income for these transactions, revenue agents are mailing letters to people they believe have virtual currency accounts. And the IRS has set up teams of agents who work on cryptocurrency related audits. Additionally, all individual filers must state on page one, the first page of their 1040, whether they receive, sold, or exchanged or otherwise dispose of a digital asset. Now, the tax rules treat Bitcoin and other cryptocurrency as property for tax purposes. The IRS has a set frequently asked questions that address selling, trading, and receiving cryptocurrency, calculating gain or loss, triggering tax bases when the currency is received by an employee or someone else for services, and much more. So this is the thing, people who consider themselves the witty people in cryptocurrency, who keeps their cryptocurrency in a cold wallet, meaning on their computer or in their phone, which the IRS do not know about. And you can do that. That's one of the advantages of cryptocurrency. But when you go to an exchange platform to exchange the cryptocurrency, say, into dollars, that's where they can get you, because almost all the exchanges are regulated by FINRA, the Financial Industry Regulatory Agency. So they report like Cash App. They report 1099s to people. They send out 1099s. So be careful with that information. And I want to add one added one here about IRS red flags that we didn't put here. If you receive a letter from the IRS, I'm telling you, if you receive a letter from the IRS, please do not sit it down, throw it in the trash. You must report somehow, some way, even if you are in the hole with the IRS, got a lot of fees, you need to report to them and say, look, I'm just in deep trouble. I need help. But please, if you receive a letter, not a phone call, the IRS would never call you or never text you. That's a scam, but they will send you mail. So please be conscious of that. We got some comments out here, everybody. Okay, so for some people it's breaking up, and that's because I'm down in Fort Lauderdale. So no, let's go. Let's sum all of this up for the people because we talked a lot of information. So let's go to the video. Let's go to summary and takeaways. All that information we gave y'all, we're going to try to summarize it in 4 specific terms.
And the first one is crystal clear. I mean, you have to know you don't want to get crossways with Uncle Sam, and you have to. There's too many things that will catch you if you're not right, and you don't want to pay penalties. You don't want to. It can mess your life up. So you gotta be right with Uncle Sam.
Keep abreast of the tax law changes. Now, if you're doing your own taxes, this is imperative that you keep up with the tax laws. And one of the reasons why I have somebody do our family taxes is that specific reason, because I know I'm not on top of the tax laws and they are ever changing. So that's why I go and have a CPA do my taxes, because I do have a lot of other things. But because they're up on it and they follow the tax laws, that's why I choose to use a CPA to do my taxes, because the tax laws are always changing every year, and you must keep up with them because IRS don't take oh, I didn't know for explanation.
Yeah, and life changes can affect tax changes. Okay, as you make more money, as you have kids, divorce, marriage, all those things affect your taxes. And it's one of the things we've been trying to drill home to you is you have to look ahead and be prepared for what's coming. And oftentimes you have no idea because you haven't been down that road before. So that's another good reason to have a professional who prepares your taxes and does your taxes, but also does some tax planning for you to prepare you for what's coming down the road.
And that's what it is. If you need help, get help. You don't want to get mixed up with Uncle Sam and getting penalties and fees and interest. You don't want to get tied up with Uncle Sam. So if you don't understand a lot of these tax laws, you don't keep up with them, look, seek help. And like Doe said, there's a lot of people that know how to do taxes that do keep up with the tax laws. But make sure you get the proper help. Don't try to figure it out yourself, because and Doe said it, so he's a CPA, and sometimes these tax laws are even hard for him to follow.
Yeah, they change.
They change all the time, and sometimes people are able to read. Now, Doe, this last one I added, right? This is a service called the Taxpayer Advocate Service, the TAS, and it's an independent of the IRS, but it's provided by the IRS, and they give you help, man. If you're struggling, if you got a bunch of penalties and fees, and you're not able to pay them, or you didn't file something correctly, you got questions, this is the number. If you're in the DMV, the number is 804-916-3501. That's in Richmond, but it's for the DMV area. Now, each state has a taxpayer advocate service. Now, this time of year is pretty tough because it's really, really busy, and it take a lot of time for them to get back to you. Sometimes they'll say it may take a month. But let me tell you, I have used this with people who have been in trouble with the IRS. I mean, thousands and thousands of dollars, in trouble, and they have been forgiven through going through the taxpayer advocate service. So, please keep that in mind, because that's a wonderful, free, and it's free, by the way, ladies and gentlemen. It's free, and it's provided by the IRS. That's what's so interesting about it. But yet, it's independent of IRS. I know some people don't, when they think about going out there on it, they go like, "Oh my God, the IRS! I ain't going to call them." No, it's independent, and it's their attorney. So, just want to give that little extra tip there. So, let's thank everybody for tuning in. Dope, another show with a lot of information. I hope y'all had pencil and pen. And remember, if you want to go back, you didn't catch everything, you could go back on YouTube and Facebook and type in the FITT Show and see this show. And because we archive all our shows, and you can go out there and find them. So, Modestine said, "I'd rather pay to have my taxes done." Okay, that's good stuff. I'll go with that. That's a personal decision.
But you can relax if you have someone else do it, because I mean usually they're professional and you don't have to worry about having made a mistake, you know. And hopefully they're doing some tax planning for you, so you'll be ready down the road.
Garnett said the same thing. She said she has her taxes professionally done. So you ain't trying to mess with Uncle Sam. And remember this, we always talk about Uncle Sam, but if you live in the state of Maryland, don't forget Aunt Merlin. And if you like dope, you living down there and you in South Carolina or North Carolina? I always get 50.
South Carolina.
South Carolina? Oh, well, in those cases, it's Aunt South Carolina. All right, y'all. Thank y'all for tuning in. We're here every week at 8 p.m. Make sure you tell your friends, share with your family, friends, and neighbors. This is a lot of good information. As I said, please go out there on those archive shows if you want to get, follow up with something that you missed. Thank you for tuning in. Do you have any final comments?
Just get your taxes done and stay on top of it.
Like the Marvelous said, don't mess with Bill. Don't mess with Uncle Sam, y'all. I'm trying to tell you. All right, have a good one, y'all. Thank you.